All right, guys, we're back on the Next Level Agent podcast, and I am joined, I think, for a second time now, with my friend and my bookkeeper, Mr. David Pittiglio of Streamlined Business Solutions. David, how's it going, man?
Hey, buddy. Good to see you. Thanks for having me on.
Absolutely, I'm glad to be back, or I'm glad to have you back. I've been wanting to have this conversation, and then, luckily, we were having a conversation. You and I were having, and Fred were having like just a random conversation, and this topic came up about some work you'd been doing with like real trends. And for anybody that doesn't know David in Streamlined Business Solutions, first of all, you should, and second of all, if you don't, I'm going to tell you a little bit about what they do, and then I'll let David tell you in his own words too. But I mean, they're the bookkeeping company for our industry. Like they are it. Like there's probably other people that do books for top real estate agents and teams, but nobody that does it at the scale that they do and that has access to the data that you guys have. And I love it because you force Fred and I to look at the numbers in our business that we wouldn't normally look at. You force us to slow down and compare things. And I just really appreciate what you guys offer as a service. And I think it's something that more and more people in our industry are paying attention to, but there's still a long way to go. Like more people need to have the service, whether it's, I'd love for them to use you, obviously, but at the end of the day, if they're not using your firm, they should be at least using some sort of bookkeeping and accounting services. So, it's like your tagline, right? You keep selling, we'll keep score. And that's at the end of the day, we're business people. We need to be out there running our business, but we do need a scoreboard. Did I do an okay job of explaining what you do?
Yeah, 100%. Great idea and concept of kind of what our business does. Maybe to add on to that, our company specifically, and yes, there are other bookkeeping firms and companies out there. Our goal is of course the end in mind, right? Like in order to get great financial reports on the back end, we have to know what questions are being asked of the financial report or of the scorecard that you're talking about, right? So if we have great questions of our financial statement, what's my ROI and my lead gen? What is my cost of sale percentages? Why am I losing money here? Amongst many other questions, of course. But if we don't know how to obtain the answers from those financial reports, then really it's just ink on paper. Our goal is a little bit different. Ask the hard questions, provide financial reports to answer those questions, and it's all based on, devil's in the details, it's all based on how accurate and how good the information is that is being put into a financial file. You've heard it before, garbage in, garbage out. We need to make sure that we have great information in so we can get great reports out of it. And then of course, answer those questions.
I was literally going to say that. I used to have a boss that said that all the time. I worked in data reporting and call center worlds prior to real estate. And he used to always say garbage in, garbage out. Like you can't give bad information into a system and then expect to get great reporting or accurate reporting come back out. It just doesn't work that way. You've got to have that flow's got to go both ways. I love that too, what you said. Like we've got to ask great questions from it's not enough just to have the financials. We got to ask it great questions so that way we can get the insights that we need. So we can get the business intelligence, if you will, to make the decisions we've got to make.
100%.
Well, so where I was going before we kind of got off on the tangent of sort of what Streamlined Business Solutions is and what you guys do, we were talking about you call it the Streamlined Benchmark Report, which is effectively a project you've been working on because you have so much data from so many, I always say big teams, but the reality is you guys service everything from the solo agent up to the big mega teams that are even bigger than us, right? And so you have so much data and such a good basis of comparison. It's one of the valuable things I've always gotten from you guys is when we go through our reports with you guys, you don't just tell us how we're doing. You go, hey, by the way, this is what you look like compared to your peers being in a similar group size of number of homes sold or GCI, things like that.
GCI, yeah.
And I think that's important, right? Because not that I need to, not because I need to feel good about myself or I need to feel bad at myself, but it's always good to have a baseline, right? Comparison is one of those things that it's a very nuanced thing. Some people tell you comparison is the thief of joy, and someone else will tell you without comparison, how do you know it's possible? And I'm one of those guys that kind of, I see both sides of that coin. And so I love that you guys provide that. And that's effectively what this Streamlined Benchmark Report is doing. And I noticed that you guys had started working on a project with Real Trends to release the data, and they had written an article, or you had written an article, I should say, probably for them or with them in regards to that. I thought it'd be cool to kind of go through some of those findings if you're up for it.
Sure, absolutely.
So the first thing that stuck out to me in that article, Dave, was small teams lead and retain gross margin. So first of all, do you mind telling me, when I say that small teams lead and retain gross margin, first of all, what's a small team? And then I'm going to take us a step back, even more remedial. Break down gross margin for me.
Yeah, sure. So couple questions there. In our world, the way that we categorize different revenue brackets within the teams that we manage, and we manage about 850 teams across the entire nation right now, to give you a perspective of the size of the data set that we have. In our world, a smaller team is a team, and I say team lightly because it most likely could be a solo agent that is managing the business themselves. They're taking the listings, they're doing the buyer deals, and that usually is about $300,000 in annualized GCI. Most I guess what's the word, misconception is that when we talk about top line revenue, most agents look at the dollar figure that hit their bank account, and although that's not wrong or bad, but it's not the whole truth. And it's really important that when we start analyzing data, we're looking at the truest top line GCI, gross commission income number, which is inclusive of your co-brokes or cap fees or any brokerage fees, so on and so forth, commission splits, so that you can, again, ask great questions of your financial statements. So when I say that, a team on a smaller scale would be 300,000 in annualized GCI or less. And that gross margin is basically the percentage of the top line GCI number. So you can ask a percentage of net income. Gross margin would be, after your cost of sale, which would be essentially, broker fees or commission splits. And then of course you have operational costs as well. But everything boils down to a percentage of that revenue number. If you are, I'll give it a quick example. If you were to look at a financial statement and take a percentage of net income, but only base it off of the commission check that hits the bank account, you're now comparing apples and oranges. So you can't use this data set unless you're really looking at accurate information. And this is we get it in various different ways, of course, but that's the basis for the report.
Yeah, I love that. That is, you bring a good point about a lot of people kind of, they start their accounting at the amount of dollars that hit their bank account. But the reality is that's not a true cost. You had expenses, right? Like you said, even if it's just, say, your broker split, right? You paid it, whether or not you actually ever saw that money and had write a check, or they just took it before it got to you. You did in fact pay it, or maybe better stated is, it was a cost for you to do business, right? And so it does really, if you're gonna act like a business person, you're gonna act like a business owner, then you kind of have to talk the language, and that's part of talking the language.
Yeah, and going back to asking great questions, if you are looking at strictly your net check that hits the bank account, how could you then ever ask the question of, are my commission splits too much, or should I not have done a co-broke on that deal? And I'm not saying that's right or wrong or indifferent. It's just, we can't ask great questions if we're only looking at a part of a data set, not the true I'll call it CDA or closing disclosure, or commit the full commission check. Have to look at the true number.
Yeah, no kidding, no doubt. What I thought was not at all surprising, yet very interesting to me, was as you define that as $300,000 and below, and then we define the big teams as 3 million and above, right? And that gross margin dropped all the way down to, I think it was just under 46%. So basically 80% down to 46% in a gross margin. Now,
Yeah.
for me, I think you and I are on the same page. You and I have spent so much time together over the last 15 years that I feel safe saying this about you too, is like, yeah, some people see that and they go, why would I want to keep so little of my money? And I'm like, well, I would much rather keep a smaller percentage of a larger amount than to have a bigger, kind of hoard it all or hoard most of it from a smaller amount. But it is really eye-opening. I think a lot of people, they run a smaller team and they can have a gross margin at say 75 or even 80%. And they think they're going to be able to retain that as they grow. But the data tells us as your team grows and you start to hit 1 million and then 1.5 million and 3 million, like those numbers, that percentage of money that you keep just continues to go down. Now, hopefully what happens is the amount of money you do deposit in your bank account, or the number that hits your tax return at the end of the year, continues to rise. But the reality is on a percentage basis, it's going to go down. Is there anything that jumps out at you when you look at the difference there between these small teams and the large teams that are 3 million plus GCI?
Yeah, there's a lot of different comparisons. I'll tell you, my business coach always told me you can't take the percentage to the bank, but you can always take the dollar. And so back to your comment, right? Like, I would rather have a smaller percentage of a really big pie than a large percentage of a very small pie, because I know that dollar figure, the one that drives my family, the one that allows us to do the things that we want to do, that dollar figure is going to hit my bank account at a larger level if my percentages are lower and my revenue is higher. Now, the best of both worlds would be, how could I ask the questions of my business to not only have a really high revenue number, but then to also drive the costs lower for my business, so I could kind of have the best of both worlds. And then we're talking a lot of money. But the concept there is essentially you're buying your time back, right? Like, lead generation at a higher revenue number costs more. Your support team and your leverage points, your tax returns get a little bit more difficult. And I would much rather pay for those larger cost tax returns and cost to run the business, knowing what's coming home at the end of the day.
Yeah. You mentioned that kind of about the cost. That was the other part of the article about, how are teams spending money? And if I remember right, the largest expense for teams was employment costs, so like salaries, wages, taxes, in some cases, contract labor. And that was the biggest percentage of cost. While, I think it was on the small teams, it was as low as 11.2%. But for the bigger teams, like you're pushing over 17% of GCI as a cost. So you can see that I think it's easy for the agent to go, well, I'm selling 50 houses now, or I sell 100 houses a year now. And I only need 5 people, but or maybe you only have 3 employees at that level. But the reality is, if you're going to go to say 500 units a year, like, you're not going to get by with the same number of employees. Those costs are going to continue to grow. And I think it's something that people don't think about. They think about their expenses today, and they think about the income that could be, but they don't ever think about the expenses that could be as well. And those two things are going to generally grow together to a certain point.
Yeah, absolutely. One of the, again, going back to great financial reports, if I know what is, then I can almost reverse engineer the conversation. So if I said that wrong. If we're doing $300,000 annually in revenue, but I want to be at $800,000 a year in revenue, my brain tells me I would go look at the models of an $800,000 team and go, I'm looking at a 5% increase in salaries and wages, what does that dollar figure look like? Who's my next hire and why? So being able to reverse engineer, it's simple math, it's second grade, right? We're just multiplying the percentage difference to the revenue numbers. And so that ability to ask those questions and have those answers gives really good guidance for a business owner to move forward.
Yeah, that's an excellent point. What about lead generation costs, Dave? Like what do you see in the differences of the lead gen costs when you're looking at, say, the small team versus the large team?
Yeah, really, really good question. I will tell you for the Q1 2023 data that we were able to pull, it starts around just below 10% for a team doing $300,000, and then it ends up at about 6% for teams doing $3 million and above in top line GCI. So there's some scalability there. It does fluctuate, ebb and flows through the different revenue brackets, and there are 6 revenue brackets that we track. And but I will tell you that it's pretty consistent over the course of the deltas here.
So I think as an entrepreneur, someone who is always kind of tinkering with their business, one of the things I think, Dave, is I look at this and I go, what if I spent 12%? Like, is there a correlation, or is this just, hey man, this is the law of the averages. You're gonna land at like 10%. And anything more than that, you're probably just overspending. Is that the case? Or is there an opportunity for me to exploit something here?
Yeah, that's a great question. It's a loaded question. In my personal opinion, I think the average is going to land right about, give or take 10%. As a business owner, would I anticipate spending more or going above average and saying 12% or 13% of GCI? I might pull that trigger knowing that the ROI on that specific lead source is producing more revenue on the back end. Now, what that does is it might spike your lead gen cost for this month or this quarter, but if you start to annualize the information and start to look at what those lead sources or extra expenditures in that category produce in the long run, likely it's going to come back down to that average percentage of GCI.
I have an ad hoc. I have a question, and I probably should have prepped you for this, but I just didn't even know I was going to ask it. So if you can't answer today, that's fine. Maybe we can do it. What I'm hoping is that since you produce this information and this benchmark report effectively quarterly, if not probably, you could probably do it on demand at any point too, I would imagine. But one of the things I'm hoping to do is that you and I can maybe get back on a podcast once a quarter and talk about this, just to keep the listeners up with going on, understanding what the trends are and what people's peers are spending their money on, things like that. My question here though is, what about the teams that are based with like a heavy referral fee baked into the cake? So let me give you an example. Zillow Flex. If Zillow Flex is a program where you don't pay for the Zillow, you don't write them a check every month, you give them 35% of the GCI at closing, right? So 35% is off the top. Some people
Right.
have very much like, back when you got started, your first couple, in fact, the only people that I think you had 2 clients before Fred and I, they were REO guys. So this is kind of like the new REO account, right? And so, yes, it's a very high cost thing, but I'm curious what that does to someone's financials when they've got, say, 100 or 200 transactions out of their 300 or 400 total that have a 35% fee, like right off the top. Have you noticed any trends like that? Or do you have enough clients that are that heavy into it yet to be able to pick up on any certain trends?
Yeah, great question. I know exactly what you're talking about. We do have a handful of clients in those scenarios. I can pull that data, but I don't know it off the top of my head. What I can tell you based on what I have kind of studied of, yes, I mean, just as you would imagine, right, cost of sale is much higher because you're taking a hit right off the top. However, same thing back in REO days, the cost of the actual listing in terms of an expense or lead gen, right? So you have to start, in my opinion, you look at the entire financial statement. Sometimes you have to look closely at lead generation and salaries and cost of sale as a whole, and then collectively say, you know what, as an average, collectively, we're doing really well. Yes, my cost of sale might be above average because I have these deals with whatever the case may be. I'll call it co-broke. But my lead generation costs, in terms of like, now I'm not spending any money on print and direct mail, or maybe I'm not doing billboard advertising anymore, right? And so now my lead gen cost is really, really low. I'll put this out there only because I've seen it with my own two eyes. And when I did start with REO 15 years ago, the transition away from being heavily in those specific items and not paying attention to the rest of the business can be detrimental, meaning the shift can't happen quick enough.
Yeah.
So and I'm making this up, right? Like, this is an example, this is not true. If Zillow were to go away in this scenario, then the whole revenue source goes away because the lead generation hasn't been kept up on it in other aspects of the business. So just completely an example. I want to make sure I'm really clear about that.
Yeah, no, but that's a great point to bring up, dude, because you and I both saw a lot of people get caught. There's a lot of REO agents that are no longer even licensed, right? Because they didn't know how to, like, they never learned how to run a regular retail real estate business. They didn't know how to lead generate outside of their asset managers. To a lesser degree, we saw the same thing with our short sale peers, right? They couldn't figure out how to do it. And I'm not shy about it. That was the hardest transition for me in business, was going from taking listings over the phone because I knew more about short sales, to actually having to sell and go sit in someone's, dining room, kitchen table, and get them to agree to hire me to sell their home when they had equity. It was easy when it was a short sale. So when you ignore everything else except for one source for a long period of time, that can bite you in the butt for sure.
Yeah, and there's zero judgment on that concept, because everybody owns a business. I assume and just because you're selling real estate doesn't, you're a business owner, right? You're running a business. And so going back to our initial comment and how you started the podcast today, having accurate financials so you can ask the right questions of your business, and you go, 80% of my revenue comes from Zillow in this example. I'm not going to worry about that 80%, but I'm going to go start doing X, Y, and Z to make sure I can bring that 80% down to 50% in terms of a lead gen source for my company. That way you're not a one-legged stool should something go wrong.
Yeah. Sorry, and I didn't mean to take us off on the lead gen tangent there, but to me, that question came to me because I know so many people are doing that, and it's still a percentage of our business too. To a much lesser degree, we're not like a specialist in that, like I know some people have, and again, nothing wrong with it. In fact, I know some people are absolutely killing it on that side of their business, and they realize the best ones know, they're aware that they're making hay while the sun's shining, and they're going to use that and exploit it, and but they haven't forgotten about the rest of their business. So
100%. And I can't speak for you, but I can't say that I wouldn't take advantage of that opportunity either, right?
Yeah, for sure. If you've got the ability to scale it up, I think it'd be silly not to, because it is sort of like, it's effectively, it's I don't want to call it free because it's still a lot of hard work, but it's like free money. So,
sure.
Okay. So moving on to the last part, you talked about operating expenses as a percentage of GCI, and kind of how, what were some of the trends that popped up in this quarter, or I should say even really last quarter. We're talking about first quarter numbers right now in the Streamlined Benchmark Report. What were some of the trends you saw when it came to operating expenses?
Yeah, operating expenses, honestly, they really trend and scale downwards, meaning that as the business's revenue increases, a lot of the costs, like I'll do bookkeeping or office supplies or insurances, or, you still have the same vehicle, whether you're doing $300,000 a year or $1.5 million a year. So as a cost or as an expense to revenue, things start to trend downwards. And of course, when you say OpEx, I am excluding salaries and lead generation in this conversation.
Got it. Yeah. That makes sense. So if I'm just going to restate it because I want to make sure I heard you right. Effectively, it's kind of like that bigger cost is almost like that entry cost, like whether you're doing 300,000, 500,000, a million, or 3 million, it's kind of like it's writing that first check for your expense. That's really the expensive part. And then it's not necessarily a 1-for-1 increase with income. In fact, it's a lower percentage the more you go up. It still moves, but it's just
Correct.
a lower percentage, right?
Correct.
And within those operating expenses, were there anything, is there anything that stands out to you? I think I remember Steve Murray writing, kind of adding a quote in there about basically larger teams more efficient, which is what you just said. It's just a different way of what you just said. But was there any other sort of like trends or things that stuck out to you for when it comes to operating expenses that maybe your average agent or maybe someone who's not your client that doesn't look at this type of info might not know?
I'll pick on two specific categories just to give you an idea of where things start to spike a little bit. First one would be occupancy, right? So the brick and mortar, if there is an office space, at some level, the concept changes from, okay, this is one of my businesses, but why not go buy a commercial building? I can cost segregate it and depreciate it. So the cost of your occupancy goes up at some point in time because a lot of people do that, or you might need a bigger office space. So that is one concept or one kind of idea, and that I see fluctuate as things go up. The other would be like coaching costs. So no longer is it just the rainmaker writing that check. We now have our main listing agent coaching, or we have our lead buyer's agent coaching, or my admin team, so on and so forth. So, and that's all a choice, right? We choose to spend that X amount of dollars per month for this benefit. And I would ask the same question of the expense that I'm writing as I would for lead generation. What's my ROI on that investment? Whether I don't know, but does that make sense?
Yeah. Well, another thing
that
sticks out to me, like you just kind of jogged for me, which is cool. If the average, let's say I'm a $3 million team, and if the average team has whatever, $2,000 a month in coaching expenses, I'm just making this up, and I have none because I don't have a coach, but the average 3 million, like I might be going, what am I missing out on here? Like, am I missing? For me, coaching's an obvious one. I'm like, well, yeah, I think we should all have a coach personally. And so I look at that too, is the ability to benchmark against everyone else with, man, I'm not even spending money here. What is the opportunity I'm at? Or let's say I'm only spending, I don't know, 5% of for lead gen. And I know that the benchmark is closer to 10 or 11%, then I'm definitely going, man, maybe I should at least be spending what they're doing. Like if I did that, could I add more income? Could I add more revenue? And so I think that's the even more valuable information that I could be taking from a report, like a benchmark report like this.
100%.
Awesome.
100%. It's not always a cost cutting conversation. It could be where's the opportunity lost?
Yeah.
Yeah. Great question.
Yeah. Like it could be like, hey, I'm really good about my expenses. I don't spend, I don't overspend. In fact, I'm probably not spending enough right now. I've got this extra, let's say, a couple $1,000s a month in my budget that I wouldn't notice if it was gone. What could I exploit by doing that? Like where could I spend this and get a return? And I think being able to take a look at something like the Streamlined Benchmark Report to go, well, what are my peers doing? Or maybe what is the group of, maybe if I'm at 1.5 million, what are the $3 million guys doing? And maybe that's where I spend my next dollar. Maybe that's the thing that's going to help me get up there. But if we don't have these conversations with you or somebody on your staff or even just with ourselves and hopefully our business coach, then we're going to miss easy opportunities to grow our business.
Yeah, well said.
Right on. Well, Dave, I know this just came up because we happen to be having a conversation. It was almost like a side topic, and I was like, wow, we should talk about that. So I'm glad we did. Obviously, you and I are recording this. The second quarter recently ended, and I know I believe you said you should have those benchmark reports done here rather soon. I'm hoping maybe we could come back and do another podcast, talk about that for the second quarter, and then hopefully once a quarter going forward, if you're up for it.
Happy to do it. Thank you so much. Love the opportunity.
Right on. Well, guys, what we'll do is we'll put a link to the article so you can kind of see some of the stuff that we talked about in writing with a little more commentary from Dave as well as from Steve Murray from Real Trends. And let us know what you think. I think this having conversations like this is super valuable and very important for business owners. And as you stated and I stated, being a business owner is actually what we do, and it's important that we act that way.
Yes, sir.
Right on. All right. Well, guys, David Pittiglio, Streamlined Business Solutions, thanks a lot for being a guest today. Guys, reach out to David. We'll put all of their contact information in the show notes if you've got any questions. David, do you mind? Do you have like 30 more seconds to tell everybody? I know because I'm a customer. So I know that I have access to called the dashboard, which is effectively like a real time. I get my benchmark numbers in real time, but what's the best way for people to reach out to you? And is there any one thing that you would share with the person who maybe doesn't have a bookkeeper, or maybe they're keeping books, but they're sort of doing it in-house or something, and they're not really at that next step where they should be calling you, but they really should be?
Yeah, so our dashboard is just technology. It's proprietary information that we have developed over the course of the last couple of years. And inside that dashboard provides a direct insight to your specific business. And then the ability to compare to the different revenue brackets by expense category is a great solution for somebody. Somebody that's on the fence about bookkeeping. Of course, I'm a little bit biased in terms of outsourcing it, and the reason for that is because QuickBooks Online they're good tools, but if you don't know how to utilize the tool, if you're not a bookkeeper by trade and understand financial reports and how to put them together, it might be best to outsource a solution like that. And I always kind of use the real estate example, right? Like I can put a sign in my front yard and hope that somebody calls me to buy my house, right? But it's really not. It's not what I'm good at. It's not where I should be spending my time. I own a bookkeeping firm, right? So I try and use that analysis to say maybe it's worth at least having a conversation. Regardless, keeping track of your financials. We only talked about the benefits of better business ownership today. We didn't even talk about proactive tax planning or tax preparation and things like that. Everybody's filing taxes. It's not going away. So if you can have better opportunities to not pay as much to Uncle Sam because you've proactively made decisions to reduce tax liability, I mean, that pays for services in and of itself. And so for a couple $1,000 a year, it's kind of a no-brainer to me.
Yeah, it's absolutely no-brainer. If I could give a little bit of money to you guys, a little bit of money to my tax accountants, and it avoids me giving a whole lot of money to somewhere that's going to be blown and probably wasted, I'm all for sign me up, right? All day long. So, well, Dave Pittiglio, I appreciate you taking the time out today, being a partner and customer of yours. I should say a customer, and having Streamlined just be a partner in our business, because you just take the time to invest in us and share not just our numbers, but insights as well, to make sure we're understanding it, has been so beneficial to Fred and I over the last 15 years that I can't overstate how important it is. And so for those of you listening that haven't taken the step yet, do it. Reach out, talk to somebody on Dave's team and take a look, because it's one of those things that I think we got to have.
Absolutely. And I'll just end with one quick thing, Kevin. One of the opportunities that I see often is there are people that are scared to have the conversation about the financials. Because they just don't know, right? They've never experienced it before. They got into the business because they were good at selling, and now they're making money, but they don't really know what questions to ask. And for those people out there, I will tell you that there's nothing you can tell me or show me that I haven't seen before. The goal is, let's just get on the same page. Let's produce some reports that are meaningful, and let's figure out how to use them. So that would be my last parting word.
I'll make fun of myself, and I'll also share something my good friend Dustin Runyon said. He calls that FOFO, fear of finding out. We just sometimes we just have fear of finding out, right? It's why we don't get on the scale. It's why we don't do a budget. I know people that have not filed taxes in some cases decades, literally, because we're scared. And so where I'll make fun of myself, I remember when we first started working with you, and I literally would mail an envelope every month, a white envelope full of receipts, and like, here's my mess. This is me. Sorry. And it kind of sucked, and it was embarrassing, but nobody on your team ever made me feel embarrassed. It was just like, hey, I got and I literally once a month put it in the envelope, mail it off to you guys, and you guys would do the report. And it always made tax time so much easier. You guys never made me feel weird about it. Although I know I'm a mess, and a lot of us in real estate agents are not the most organized folks in the world. But that's exactly why we should partner with a company like yours to help bring that to our life and to our business. So love that you guys do that, man.
Yeah. Oh, thanks, Kevin. It's been a great time. I appreciate it.
Right on. All right, guys, we'll see you next week on the Next Level Agents podcast. Till then, have a good one.